A brand new 15-page report was just dropped this week that made the very interesting claim that 6.1 million Bitcoin are held by only 200 Bitcoin whales. Is Bitcoin too centralized? Well, today I want to dive into this report that claims that only 216 Bitcoin holders right now are controlling 5 million, 6 million coins. And when we also kind of consider the fact that, hey, 5 million Bitcoin are lost, 6 million Bitcoin is supposedly being hoarded by these large centralized whales, when we start running the numbers, there's really only 9 million Bitcoin left, aside from that 11 million Bitcoin hoard that is currently not moving. So I want to explore what this 15-page report says about Bitcoin's future and whether, in fact, Bitcoin treasuries are centralized or not. And of course, we're going to be fact-checking all of these claims by peeping on over at one of my favorite websites, the Bitcoin Rich List. So let's start here at first principles. What is this report? And what's really interesting is it's created by pro-Bitcoin people, Glassnode and Gemini. This is what made me pay even more attention to this claim that I saw flying around on Twitter earlier this week, because a lot of people have obviously tried to, throw shade on Bitcoin. A lot of Bitcoin critics have said, look, Bitcoin is highly centralized. A lot of people correctly point out the fact that these large exchanges like Coinbase and Binance, they hold millions of Bitcoin, literally millions of Bitcoin, 5-10% of the supply. But a lot of the critics don't mention the fact that, hey, these big exchanges actually service 100 million, customers or 100 million clients. So this obviously muddies the waters a little bit. But what I found really interesting about this report is, again, it's done by Gemini and Kraken, two pro-Bitcoin entities. I think we can call both of those guys pro-Bitcoin entities on net. They're pro-Bitcoin. Now, I want to dive into the report that they laid out this week that's catching a lot of attention. I think another reason why it's catching so much attention right now is because the Bitcoin held by whales and long-term holders, this is absolutely exploding right now. Have a look at this chart, for example. This purple line is showing us the growth of new whales in Bitcoin, and it's exploding. So yes, we now currently have 6.1 million Bitcoin in the centralized control of these big centralized treasuries. But a lot of people don't worry about it. It's just 6 million coins. There's 19.8 million mined today. But again, what I've been really banging the drum about, so to say, is the change in the pace. These whales and these public corporations, they are not slowing down. I mean, have a look at this chart. This thing is parabolic. They're buying Bitcoin at record-breaking, accelerating rates. This is another chart, and it's a little bit of a peep into the future of what I want to discuss in a lot more detail tomorrow. We've got a deep dive planned, and I do not have time to cover everything I want to cover tomorrow in today's live stream. So have a look at this. Holdings of Bitcoin in public treasuries, 312,000 in Q2 2023. Let's fast forward to Q2 2025. 800,000 Bitcoin. That is a net gain of 500,000 coins in only 2 years. Did somebody say supply shock? It's still wild that people claim there is no such thing as a supply shock when, all of the data right now is not only very clear, this is the number of Bitcoin on exchanges measured by CryptoQuant, but it's accelerating at a breakneck pace, which is why the charts that I just showed you of the whales holdings of Bitcoin. I'm paying extra attention to charts like these right now because, look at the chart. We've never seen anything like this before. We do commonly see whales and new whales accumulate Bitcoin before the bull run starts. That's very normal. That happens every cycle. But we've never seen growth like this. This is insane when you think about it. And I think this is going to help to give us a little bit more color surrounding this new report that we've got from Gemini and Glassnode. Again, Glassnode is an on-chain analytics firm. So if anybody is tracking the growth of whales, I think Glassnode is doing it better than most. Let's break down their findings. Bitcoin treasuries by entity type. Let's have a look. In the orange, this is the exchange holdings of Bitcoin. Now, again, I've got a little bit of a problem with the scale of this chart because as you'll see, the orange line doesn't necessarily look as if it's going down as aggressively as this more zoomed in version that I always show you guys from CryptoQuant. Again, this is a 3-year chart. We're not cherry picking data out here. This chart is showing us a trend for 3 years. It paints a little bit of a different picture than the one we've got over here at Glassnode, but that is not the topic for today's video. What's interesting is the growth of the other colors on this chart. The yellow, the blue, the purple, the green, the turquoise blue. Is that what we're going to call that color? That is private companies. But all of these different colors, it's representing the growth in private companies, in public companies, in government holdings of Bitcoin. This thing is growing aggressively, and it adds a little bit more color to the website that I always show you guys, which is bitcointreasuries.net. We can see these entities are holding 3.4 million coins. But when we jump on over here to this new report, the figure is even more staggering. Again, I've been screaming from the rooftops for weeks, for months, for years, literally years, saying this number, the number of Bitcoin held by billionaires, pension funds, public corporations, private corporations, it's growing at a breakneck pace, and I think it's going to change the Bitcoin cycles forever. But then I found this report, and I was like, hang on a minute, 6 million Bitcoin is being hoarded in these treasuries. Have a look at this. So this is Cointelegraph. So again, take what they say about Bitcoin and centralized Bitcoin treasuries with a grain of salt. They're not hardcore Bitcoin maxis over there. So again, it's just a little bit of a caveat there. But what we do think is that it's pretty undeniable that large entities right now, they are the ones accumulating Bitcoin at a breakneck pace. Let's have a look at some claims here that I find, let's say, a little bit interesting. So today, the total Bitcoin held across major institutional entities has surged to 6,145,000 Bitcoin, representing an increase of 924% in supply held by centralized entities over the past decade. I think this is natural. The big boys have really largely got into Bitcoin in the past 5 years. So I don't doubt that number. Sure, I think that's true. I think this is interesting. Over 30% of Bitcoin's circulating supply is now held by just 216 centralized entities, reflecting both expanding institutional adoption and deepening custodial centralization. Very interesting. Let's dig deeper. We can see there's 101 public companies that Glassnode is tracking, 27 exchanges, 12 governments, 40 ETFs, and all sorts of different funds. There's a couple of other really interesting charts that I want to show you. That's not one of them. This here is one of them. So this here is looking at the Treasury 30-day net flow by entity type. Look at how volatile things have been getting over the past 6 months. In particular, since May 2024. If I can make this a little bit bigger for you guys, this again kind of validates the idea that I'm most concerned about by saying, look, the past 6 months, this is very different. Like the 6 months in early 2025, it's wildly different to the 6 months in early 2021. Look at the magnitude of accumulation and flows in the early 6 months of this bull run, which is where I think we are. We're in the beginning stages of a bull run. Compare that to the magnitude of the flows in early 2020 and early 2021, sorry. Completely different ball game. I think that's interesting. A lot of people are saying, oh, it's just another bull run. You know, who cares? Again, Nobody knows the future. Everything in life is a probability. Who knows what's going to happen in the next 6 to 12 months? All I will continue to say is that the probability that Bitcoin will be perfectly predictable every single cycle, I think it's BS. That's it. That's all I'm going to say on that topic today. Let's move on. Let's take a little bit of a peep at this 15-page report that's catching a lot of attention. Sovereign treasuries is obviously an interesting one. We can see the US is still leading that sovereign treasury race. And we can see the Kingdom of Bhutan in blue on this chart. We can see that they are also increasing their holdings, and El Salvador increasing their holdings. This report's showing something interesting in my eyes. It's showing that a lot of these big nation states, public corporates, they're net accumulators. Yes, there's always going to be one or two entities who sell their Bitcoin. Never going to deny that. But when you jump on over here to this website and you look at this bar here, where is the trend? What are the majority of companies doing? Is there a trend? Is it 50-50? 50% of companies are buying Bitcoin and then 50% are selling it 6 months later, 2 years later, 3 months later. Do we see that? No. If you look at the large majority here, they're buying Bitcoin and they're not selling their Bitcoin. I feel like we're seeing a pretty clear trend here when it comes to public corporation, private corporation, nation state adoption. Aside from the basket cases like Germany, who sold billions of dollars of Bitcoin for a massive loss, I feel like we're only seeing net accumulation. And this is that big red box I hope helps you guys see what I'm seeing. Again, I could be crazy, who knows? But that big red box there kind of shows that 90 to 95% of the biggest public corporate holders of Bitcoin, who today hold about 800 to 900,000 Bitcoin, they're net buyers, they're not selling. This is a one-way highway, baby. This is Hotel California. You can check in, but you cannot leave. That's what this chart is showing us. It's showing us once the Bitcoin goes onto the treasury of these large public corporations, who again today hold 3% of the Bitcoin supply, about 800 to 900,000 coins, those coins are not leaving those treasuries. It's very rare. It's not speculation. It's not an opinion like the power opinion. It's just what the data is showing us. Again, I think it's super interesting. I want to do a pulse check and see what the everyday person is saying about this, because obviously some people say this is bad, this is scary. And a lot of people have been talking about this for a long time. Let's not forget this website here. This is Bitcoin Rich List, and it kind of says something similar to what this new report has found. This website's fascinating. I want to draw your attention towards these rows here at the bottom. So these ones are looking at the whales. We can see the Bitcoin addresses that hold between 1,000 Bitcoin and 10,000 Bitcoin. They hold 22% of the total supply. The addresses holding more than 100 Bitcoin holds 23% of the supply. The addresses holding more than 10 Bitcoin, they hold 21% of the supply. And this is interesting because when you start to break this down, the entities who hold less than 1 Bitcoin, that is the top 6 rows here, they collectively hold somewhere around 7% of the total supply. So again, this is a typical Pareto's principle distribution here. What is that? Pareto's principle says that the 20% are going to be holding 80% of the Bitcoin. We see this all around the world. It's very common. Your 20 best clients are going to give you 80% of your revenue. Your 20 top employees are going to generate you 80% of the revenue in your company. If you have 100 employees, obviously. It's the typical 80-20. We see a similar thing playing out in Bitcoin right now, which again, I think is a good thing. We shouldn't be striving for wealth equality. We should be striving for equal opportunity. This is the problem with the world today. We have these big global mega corporates and mega structures who are trying to make everybody equal. They're cutting down the The rich, tax the rich. Wealth taxes, unrealized capital gains taxes, citizenship-based taxation. They're cutting down the rich, but then they're completely leveling the lower and the middle class. They're just destroying everyone. And they're saying, oh, we're striving for equality. Wealth equality is a terrible idea. We should not be striving for wealth equality. We want wealth inequality. We just want equal opportunity. It's as simple as that. This is one of the biggest misconceptions in the world today. People think the world is unfair and expensive because of wealth inequality. It's not. The world would be a much better place if we were allowed to have more wealth inequality. If we let the business owners, the entrepreneurs, the psychopaths who want to work 7 days a week, 12 hours a day, and build a very successful company that gives all of us cheaper and better quality goods and services, we should let them do that. We shouldn't want to tax them 80% of their earnings or some of the other crazy rules that's getting floated in the West. Very controversial opinion, but something that not many people understand. Wealth inequality is a good thing. The only reason the world's so expensive today is because of the government. It's the government printing money. They're the real criminals. Don't tax the rich, tax the damn government. All right, that's the real issue in the world. The government just uses the rich as the boogeyman. The government says, oh yeah, well, just ignore the fact that Bezos and Elon Musk are building us very productive businesses. Tax the rich. They're all a game of deception, my friends. But let me get back on point. Again, this is not a political channel. Oh, boy. Tax the rich. That took me off track pretty quickly. Tell you what, something that put me back on track is having a look at this Bitcoin cycle, because right now it is paling in comparison to prior cycles. Again, a lot of people saying, oh, the bull run's over. Pack it up, boys. Oh, we topped at 100K. Come on. Get a grip. Get a grip is what I'll say. I don't know where the price of Bitcoin is going. Nobody does. Absolutely nobody does. But to claim Bitcoin's topped at 100K, I think that's just unlikely. That's what I will say. There's one more chart here that I really wanted to show you guys that I thought was super interesting. I might have had a spicy take on that chart when I find it. Might not be as spicy as the wealth inequality is a good thing. Maybe that was my spiciest take for today. But this is my second most spicy. This report says we have Bitcoin becoming more centralized into the hands of large entities, but it also shows this chart. And it shows Bitcoin volatility going down. Is this going to continue? I don't know. I personally think it's very unlikely that Bitcoin's volatility decreases in the future. We're going to get to the day. Don't get me wrong. There will be a day when Bitcoin's volatility does begin to decrease, but that day won't come until we're in the tens of millions of dollars a coin. And I think this common opinion or the common narrative of, oh, the institutions are here, Bitcoin's getting more mature. It's true, but this means Bitcoin's also going to be more predictable and less volatile. I think that's untrue. I think that's wildly dangerous. I think that is setting people up to fail and be wrecked. Just my opinion. Again, 28-year-old kid with a wild, terrible haircut. Just my opinions. This is a financial entertainment, not financial advice. Okay, let's move on. I think this chart's going to break to the upside. I think we're going to see eye-watering volatility in the future. And it's purely because this centralization of Bitcoin into the hands of the billionaires and these really big entities, I just think it's going to create a run on Bitcoin. And we're going to see some really interesting things unfold here in the not too distant future. Because I just think we live in a world where everybody's going to want some Bitcoin. And I think we're just going to see a world where the billionaires start really scrambling over Bitcoin. And I think this day is going to come much quicker than most people think. Okay, so we know that Michael Saylor holds 600,000 Bitcoin. But what if every billionaire wanted to buy 1,000 or 10,000 Bitcoin? Well, today I want to run the numbers behind why Tim Draper's recent admittance of saying, hey, I own 30,000 Bitcoin and I'm buying more, is a sign that the supply suffocation is about to accelerate at a breakneck pace. Because again, let's not forget, today there is 2,500 billionaires. We've got Michael Saylor with 600,000 coins. We've got Ricardo Salinas, the man with a $5.5 billion net worth, openly saying, hey, my portfolio today is 70% Bitcoin. I want to get it to 100. I'm really concerned that if this trend continues going the way it does, there's going to be no Bitcoin on exchanges much quicker than we might think. Again, I talk about this all the time because I think it is the story of 2025. It is the story of the 2020s. And it's going to surprise everybody when it happens, and it's going to happen all at once. We are seeing really big warning signs that these billionaires are not slowing down. They're not stopping. Tim Draper, 30,000 coins. All right, that's interesting. But again, in and of itself, yawn. Well, look what else I saw this week. One of the world's most famous hedge fund traders of all time, Paul Tudor Jones, has got nearly double the amount in Bitcoin that he has in gold. Again, when Saylor came out on his crusade in 2020, a lot of people said, but it's just Saylor. Don't worry about it. Okay, I don't believe him that he's going to hold Bitcoin for 100 years. We don't need to worry about a supply suffocation because he's just a unique individual. Well, now we have Saylor, Ricardo Salinas, Paul Tudor Jones, Cathie Wood, Elon Musk. Should I keep going? Should we talk about the 220 public companies holding Bitcoin? We have, 235 large entities holding Bitcoin. So we got 130 public companies, 37 private companies. This website tricks me up because when we look at it here, it says 235 public companies, comma, private companies. Okay, you got me. That's why I always get mixed up with that one. But the point here is, if all these guys want to buy 1,000 big ones, they want to buy 1,000 coins. They want to put just a lazy 100 million into Bitcoin. My biggest concern is there's just simply not enough Bitcoin to go around. I mean, I show you this chart all day, every day. It's 2.5 million Bitcoin sitting on exchanges. We know that this number today is decreasing by 100,000 Bitcoin every single month. For the past 6 years of data, 500,000 Bitcoin have left the exchanges. Somewhere around 80 and 100,000 Bitcoin is leaving the exchanges every month. This is insane. This is not slowing down. And there's only 3,000 Bitcoin. No, sorry. I misspoke there. There's about 15,000 Bitcoin mined every month, approximately. Quick maths. It's 450 Bitcoin mined a day, about 30 days in a month. So again, this is, to McLovin's point in the chat here, dropping supply and increasing accumulation pumps all our bags. Eventually, this is the key point. Short-term supply suffocations and coins on exchanges has no correlation to price pumps. It's fact. It's true. The power opinion, boys. I don't know where they got that idea from, but it's never been true. Nobody's ever said this. Oh no. Maybe if we start screaming it from the rooftop, more people will start to understand that the supply suffocation is not slowing down. And what I think is super interesting is that I don't think Saylor's slowing down. Like I showed you guys last week, he's got these 3 income products: Stark, Strife, and Stride. And I think right now he's executing a master plan to begin draining the $300 trillion debt market. This is Saylor's endgame. It's tapping into that $300 trillion fixed income market and draining it. He's openly said on podcasts, we want to get $1, 2, 3, $4 trillion of the money that's sitting in that broken, faulty, fixed income market that today is relying upon a melting ice cube not melting on a hot summer's day. It's gravity. It's happening, okay? Fiat currency has to be debased forever. It's just math. We've got 300% global debt to GDP ratios. Governments are never going to pay that back. It is absolutely impossible. that we grow our way out of it, like some governments think we can. Okay, AI is incredibly deflationary. There's no way it's going to help us grow our way out of a 300% debt to GDP ratio. It's impossible. Impossible. It's not happening, okay? The only way they're getting out of this debt is by taxing you more, me in particular, any business owner. It's going to get taxed more. This is why we will not return to our draconian, tyrannical Western governments who think it's okay to tax the business owners, the productive class, 50% of their income to lock them in a cage for a year and a half, like what we saw in Australia. I ain't going back there. It's not happening. Okay, this is again what we're trying to normalize. In Australia, again, a little bit of a peep into the future. The Australian government right now is trying to pass a law that would make 30% unrealized capital gains taxes on your superannuation accounts normality. You heard me right. 3 million Australian cuckbucks. It's about 1.6, 1.7 million US dollars. It's not a ton. The Australian government is trying to say, look, anybody over that 3 million Australian cuckbuck threshold, just because your assets in your retirement account go up, you get taxed 30% unrealized capital gains, even if you don't sell. Think about them. Again, I'm gonna go on a 20-minute rant here. Let me just simplify this. The West has lost its mind, and Bitcoin is the only escape. Bitcoin is the only protection from this global debt bubble bursting and crumbling. And government's only move is to print money, devalue your money and your savings, and pay back the debt with the devalued dollars, as well as implement a lot of other very unproductive and honestly dangerous measures to help their debt burden. Obviously raising taxes and then just letting everybody into the country. Oh, come and prop up our housing property bubble. I need to be really careful what I say here. Again, everything ties back to the money. That's all I'm going to say on that topic. Everything ties back to the money. Absolutely everything. And this is obviously why we Bitcoin. We Bitcoin because everything is related to the money. It's as simple as that. It is as simple as that. And I just think it's fascinating that right now we're watching the biggest supply suffocation in Bitcoin's history and nobody's paying attention. It's wild. It's wild that we continue to see the headlines that we see. Again, I've got 100 headlines for you tomorrow. It's a little bit interesting what's going on, but it's insane. I think Robert in the chat here makes a really interesting point. Just hold your Bitcoin until the currency fails. Simple. Agreed. Greetings from Germany, incognito. Hello, my friend. If you guys are in Europe, I actually am in Europe right now. And again, I highly encourage you guys to check out what I think is going to be the biggest Bitcoin conference in Europe. That is BTC Prague. I went there last year. It was incredible. I got to interview the Giga Chat himself, Michael Saylor. And again, if you guys are going to BTC Prague, come check it out. I think it's going to be huge. You got, again, Michael's going to be speaking there. You got Adam Back, Jack Marlers, Jimmy Song, Mark Moss, Larry Lepard. All of the OG Bitcoiners are going to be at this conference. You're also going to have some squealing Australian tyrants talking. I'm going to be talking some trash up there as well. So again, come check out the conference. I think it's going to be a blast. If you haven't got your tickets, you can get yourself 10% off your tickets with that promo code LukeM10. That is linked down below in the description of today's show. And again, if you are in Prague and if you are looking for all of the really nice satellite events that are going to be going on during the conference, again, the conference is more than just 2 days. Should be called conference week because there's going to be events all week. And if you are in Prague, I highly encourage you guys to check out where the best events are happening on Satlantis. Okay, this is a little bit of a hidden gem. This is an app I haven't showed you guys before, but it's something I use on a daily basis. So you see here, it's got a city page. If I press on Prague, not only am I going to get a breakdown of the city's cost of living, quality of life, infrastructure, and everything a nomad needs to know. But here on the right, it has a little events page. So you can actually click on all the different events that you want to see and you want to go to, and you can see how many Bitcoiners are going to each event. This is a really cool app. So again, if you are in Prague, highly encourage you guys to check out all of the events happening, because there's going to be a ton. It's going to be a huge week. And if you do come, ping me a message. You can even jump on here and see what events I am going to. You can see some of them, 29 people going to this one. There's 46 people going to the Women of Bitcoin brunch. There's 72 people going to the BTC Prague welcome party. So again, if you're looking for satellite events, check it out. Pleb party. It's happening on the 21st of June. 26 people going to that puppy. 55 people are going to the Atlantis and Prospera social smoked meat brunch. Hello. Is that steak? I actually didn't see that. Anyway, long story short, if you're in Prague, you're in Europe, come say g'day. I will be there. It'll be fun. You can come tell me my haircut looks terrible in person. And I think to this comment's point, sounds like a good way to get millionaires to leave your country. That's right. All the millionaires are going to places like Prague. Well, they're going to nomad-friendly places because they've had enough of Australia, the UK, the West, America. Oh, God, Canada. Don't even get me started on Canada. That's insane. Insane what's happening over there in Canada. McLovin in the chat says, wealthy people leaving an unfriendly jurisdiction is a sort of example of the separation of money and state. It's happening. The sovereign individual playbook is literally playing out before our eyes. Comment section is lively today. That is very true. The US has floated this idea of an unrealized capital gains tax. And from memory, I'm not a what is it? An expert of the law, but I do remember there was a very controversial court case in 2023 or 2024. And the ruling by the court actually left the door open for the state to come in and introduce unrealized capital gains tax in the future in America based upon their ruling. Again, I'll make a video on the specific story, but again, it's not just America, it's France openly talking about unrealized capital gains tax. We've got my home country of Australia openly talking about unrealized capital gains tax. There is nothing stopping this train. Okay, the die have been cast, so to say, and there is no stopping this train. This is why I always encourage you guys, just pay very close attention to what's going on with Bitcoin. Nobody owns enough Bitcoin. I encourage you all to buy more Bitcoin. 605 of you guys tuning in live between YouTube and Twitter. All I'll say is welcome. Thanks for joining. And again, if you want to be notified when I go live next, I encourage giving that subscribe button down below a little molesting. And hopefully YouTube will tell you when this crazy kid is live again. With all that said, guys, thank you so much for everyone who tuned in on this Saturday afternoon. I'm going to end this one here. I wish you a good end to your week. Go and enjoy your Saturday and Sunday. I'll see you in the next one. And again, if you do want some more bullish content, I'll put a link to my most recent, most bullish interview with Peter Dunworth and British Hodl somewhere up on the screen, somewhere around there. Well, that's it, guys. See you next time. Thanks for everyone tuning in.